Good morning, traders. It's Thursday, October the 10th. Hopefully anybody who is in the Florida area has survived the night and is all well. And it seems like it's pretty chaotic over there. And we've got some friends and my sister and her kids and everybody's over there as well. Pretty intense. They had like 19 tornadoes where my sister was that they tracked last night. And anyway, hopefully everybody is all right. Let's take a look at the markets today. We got equities trading slightly lower, a little bit of a pullback, which makes sense because yesterday was a pretty nice rally across the board. Typically after a big move up, we'll see a little bit of profit taking. We'll see a little bit of a pullback. And I like gaps to the downside. Not that this is much of a gap, 1/10 of a percent, 1/15 of a percent. But gaps, tend to get filled. So the market opens a little lower, people taking some profits, and then see the market run up and fill that gap and hopefully keep going higher. When we look at the SP 500 futures, we've been in these kind of this lime green, these areas. This is an oversold kind of market condition in an uptrend where each time it gets oversold, we see buyers step in and they run the price back up. But we saw over the past week and a half distributions selling. Each time it got back up, we saw a big high volume selling, meaning institutions are unloading big blocks of their portfolio, lightening their load. We're seeing Buffett unloading. He's got crazy amounts of cash on hand. So not saying it's him, but we're definitely seeing big smart money, seeing the music coming to an end, and people are raising lots of cash. Now, people can flip that. There's two sides to every scenario. Everybody's got a different view. I hear other people talking about there is so much cash on the sidelines, this market's going to go a whole lot higher. Well, yes, it could, but I believe people are raising cash and they're not looking to get in. They're trying to get away from risk. Eventually, it will have to come back in. But keep in mind, there's way more money out there than there used to be. So what is a high level of cash right now, which is record highs with everything that's been going on, I don't think it's really all that big in terms of what kind of money was available before. There's just so much liquidity or money pumped into this market. Anyways, overall market is pushing higher. When we look at the SP 500, we've obviously broken these highs. It's held above that for the past couple of weeks, and it's starting to push up. If we look at the QQQ, it's not quite as bullish, but it is starting to break out. We've got this high, these highs through here. It has been holding up above those. Now, it's not breaking to new all-time highs, but it's definitely showing signs that it wants to move higher, and we could see a very nice move to the upside. On the 30-minute chart, you can see the NASDAQ dipped into oversold territory, came down to this the pink line, which is the 20-day moving average, which you can also see on the daily chart as it comes down and tags that. And of course, we've seen price move up. Now, let's just go back to the SP 500 real quick. We have seen, obviously, we had a big pullback here. We saw panic selling. Those are usually bullish signs. We did see some panic selling over here when the market opened up lower. And so these are, you could argue like these two are kind of almost like a double bottom type of scenario where this is where we had that fear in the market. And the VIX continues to trade up. When we look at the daily chart, the VIX is still, it's not skyrocketing high, but it is higher than normal for what we've seen in the past. When the VIX is high, they say it's time to buy, meaning there's fear in the market, people are dumping shares, and once that momentum of selling dissipates, then the markets will go higher. So a lot of things are lining up for this market to have a push higher. A lot of people think the markets are topping and going down as of heading down short term here. I think long term they're going to be putting in a major top, but overall the charts are still pointing to higher pricing. Another 4% on the SP 500, maybe even 8% on the NASDAQ. So there's potential for a pretty good leg and rally into the election period. Where is money flowing today? It is flowing out of stocks. It's flowing out of bonds. We do have money moving into the dollar and gold a little bit today. Let's take a look over at bonds. They're down about 1/3%. They have definitely fizzled out, and we had the trend change more or less in bonds several weeks ago, and since then it's formed a bear flag, and it just continues to move down. There's talks about we got economic data coming out in the Fed about inflation might be a problem, and that rates might not drop as much as people think, or potentially they don't even drop on the next rate change. So we're seeing that kind of being priced into the bond market. If we take a look over at gold, up about 0.1%, 0.14%, it's having a nice controlled pullback. You could say it's a little A, B, C correction. Obviously this red bar here, this big drop with some increased volume, it breaks this low right across here. That's what makes that A, B, this C wave down. This is where stops get run. This is where the market cleanses, it works itself out. And then those who are hypersensitive to the pullback get out, and then the market can rally up and push higher. So we'll see if that happens. Obviously, if we take a look at the 30-minute chart, we do have an oversold territory in gold. So we'll see if that is going to come to life and move higher. You can see the last time we had an oversold level at the 20-day for gold, it shook things up and then took off and rallied. So that's kind of what we're looking for. I think gold has potential. 2650 to 2750 is the upside kind of max target for gold. So we could see gold have another push up here. And I think that will send silver higher as well. So if we take a look at silver, which is up about 0.4% this morning, silver a little more volatile, definitely had a cleansing and broke a bunch of these lows. If we take a look and zoom in, each time we break a pivot low here, so we got a low here, low here, low here, low here. The more of these pivot lows that are close together, we talk about this quite often, under each one of these pivot lows is going to be a set of stops. So as price comes down and breaks this first one, it's going to trigger a bunch of sell orders. And if there's another one really close, those sell orders are going to make silver fall naturally and trigger the next wave of stops that are placed just below here. And so you can get these layers and then another one there, and it can run all of those. You get a high volume move, you get a flush out in the market, and then from there it can potentially start to run higher. So we'll see how that goes. Silver is just naturally more volatile, much harder to trade. You can see it's got oversold territories, but again, we're under the 20-day. So silver, I like to follow gold itself, and then you can use gold signals more or less to try and time and navigate the miners and the silver space, just because they're going to have ugly chart patterns. I'm not a fan of price being below the 20-day, the 20-day sloping down for silver. Silver gives a lot of mixed signals. If we take a look, let's take a look at utilities real quick. We have been seeing utilities pull back. They are set to open a little bit higher this morning. So we've got money moving into gold and utilities, but definitely we've seen utilities have a little bit of a profit-taking wave. Money's moving into risk on, and they're moving out of the risk off the utility companies. Other than that, that's kind of about it.